partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon would like to give the loyal listeners of the Moving Iron Podcast a free beanie. As cold as it's been, Shawn, I could use one of those, probably 2 or 3 of them. It sounds like with the good news you gave me before we started recording that I might need an extra 5 or 6 of them. So looking forward to that. You're in Tucson, but it's abnormally cool there too, is right?
It is. It's below freezing, snow flurries in the southern desert. That's never happened before, but it's unusual weather phenomena down here. So I thought I could get down to southern deserts of Arizona and catch some heat, and it does not look like it's going to deliver.
It's a dry cold though, so don't worry about it.
Yeah, it's a dry cold, so it only takes an hour longer to freeze to death. It's fine.
That's right.
So
you'll be okay. Well, just send an email to marketing@axontire.com and they'll express ship you one of those beanies down there for your time in Tucson.
Give me a beanie, give me a baby, give me something. I need something.
Right on. Also, Axon would like to give you a $50 discount off of your registration for the Moving Iron Summit coming up here in Nashville, Tennessee, September 11th through the 13th. So if you're one of the first 150 people to sign up, you get that free discount. Or not free discount, $50 discount. So check that out. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom has access to over $20 billion in heavy equipment sales data. Tractor Zoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. This podcast is also brought to you by Anvil AppWorks. The Dealer Connect CRMI app with integrated inventory management is an affordable Salesforce-based solution for your dealership. Create a connected customer experience to transform how you work today. Shawn is with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the marketplace. So, Shawn, how you doing this morning, man?
I'm doing really, really good. Glad to be here in Tucson and have a 2-day speaking engagement here at the Independent Professional Seed Dealers Association. So I'm looking forward to that. So.
Yeah. I thought you might be down there for the International Cactus Growers Association or something like that. But
the Prickly Pear motorcycle gang meeting was here, and that's really what I was here
there
for.
You go.
Yeah,
Tell them how many coats they need to wear when they're in the wintertime when they're out riding. So yeah.
My beard hasn't quite grown in yet. So
Right on. All right. Had a big sell-off yesterday in the marketplace. Looks like some of the reaction to what we see, some short-term rain and stuff we saw in Argentina. Seeing some moisture in some growing areas in the United States when it comes to wheat. But like we were talking about beforehand, so like a pretty big cold snap's coming back through that could right some of this loss we saw here over the next couple weeks.
Yeah, I mean, there's plenty of snow cover in the north. Winter wheat belt, I'm not really too concerned about that. I'm still concerned that there's patches and fairly large patches potentially in the center south, center east winter wheat belt that may get caught with, very similar cold pattern to what we had in December, Casey. A couple of weeks. It's not going to last, more than that, but I mean, it's going to be another couple of weeks of some really, really cold temperatures. So we definitely need to keep it a good timing. Snow versus cold is always tough to gauge that timing, but we definitely need to keep our eyes peeled. The weather will be plenty cold for anything that doesn't have sufficient snowfall. So, and in Argentina, we talked about this several weeks ago. We expected to have some kind of a short-term weather pattern change. God, we're getting some good moisture, like the first major moisture of the year. It will not eradicate a 1 in 60-year drought, and it does not look like it's going to be more than a few week affair. And it looks like we're going back to a drought pattern, as we get into February. So, I don't think this is a long-lasting event, and I think that yesterday, at least for soybeans and probably for corn, I don't think we're going to get much more of a reaction to the downside unless, this wet weather pattern proves more persistent. We don't think that's the case. Our work is not suggesting that. So our idea would be that we're probably putting in a short-term low, and we're going to start to trade, maybe revert some of this loss from yesterday and get a bounce in the markets. That's what it seems to us right now.
Yeah. So are you talking cold, like around Christmas time cold, where it's like -20 and that kind of stuff?
I don't think it'll be quite as cold as that, but it's going to be pretty close. Close. Maybe 5 degrees warmer, like just a little bit warmer.
-50. Nice.
All right. But I mean, but very, very cold, like bullseye in the center of the country, really, really cold stuff. It looks, and it's pretty much like a nationwide thing, Tucson to New York. I mean, it looks pretty expansive on the entire country, although the bullseye, is going to be that center north, Alberta, where I'm going to be going here in another week or so. Looks like it could be a little frosty.
You should talk to your travel agent about when you book your things. You should try to stay further south in the winter and more north in the summer.
I'm gonna call the Feeder Cattlemen's Association and tell them that I strongly suggest and recommend that they change the timing of their meeting. But,
see how that goes for you, Shawn. I think that'll.
Yeah, I think they may not have me come back for next year, probably.
Right on. All right. So the other day we were at a church lunch thing, and I was sitting next to a guy, and we were talking a little bit about he was a retired guy, and he was talking about the price of eggs and the price of orange juice and what he saw there. And of course, because I listened to the Moving Iron podcast, I had some knowledge to drop on him. But let's talk a little bit about the price of eggs just for a second when you're looking at the avian flu situation that we can't seem to get over here in the United States. I think the other day my wife paid almost $9 for a dozen eggs. And now those were if you went and bought the organic, double organic, free range eggs, they were $5. But the regular eggs that you get at any Walmart or any grocery store like that, they were anywhere between $7 and $9 a dozen. So I guess, Shawn, looking at that market right now, and then you throw orange juice on top of that, I guess take a look at that. Tell me what you see happening in that I guess poultry marketplace that's driving up the price of eggs so much.
Well, I have to believe that we'll get over this avian flu thing, and we'll, I mean, obviously it's in the vested interest of every single producer in the United States to get their hands around this and start producing more eggs, because that's how they make money.
Right.
So, and we can grow the supply of eggs very, very quickly if we can get our hands around it. I think we will. We know the winter time is particularly difficult for anything related to flu, whether it's animal to animal, human to human. So, I suspect as we get on the other side of winter, we get into March, get in early spring, I think we'll get our hands around it and we'll quickly get that supply back. And, as much as eggs in many instances are a must have in terms of cooking and things that you make, there is some price sensitivity to it. There is some demand destruction that comes from it. And so I don't really think this is more than just a shot in the dark to the upside for a few months, and then it comes crashing back down. I really think we're probably at the peak or already have seen the peak in prices. And probably if we have this conversation 3 or 4 months from now, they'll probably be fairly close to back to where they were before. That would be my expectation, unless, the avian flu just proves to be much more resilient. I think we'll get our hands around it. I think we're smart enough and we have a good enough containment strategy here to get over the top of this. So,
okay. Orange juice, talk about that for a minute. Is the supply of orange juice still reeling from Hurricane Ian and what we saw happening there with those 5 counties that produce most of the orange juice for the United States.
Well, remember, we had a very, very bad frost last winter.
Right.
One thing that we had highlighted last year, and then of course we had this, extreme flooding from the hurricane. So it was a double whammy. We almost, I mean, if you look at the latest USDA assessment, it looks like we're only going to produce like 18 million boxes of orange juice. It's almost like zero.
Okay.
I mean, we were doing 380, 10 years ago. So
okay,
we're almost not, we're like
not even 10%, right?
We're almost like this, we're just like gone. Yep. I mean, it's not gone, but I mean, it's practically, we're not producing any orange juice here in the United States, in Florida at all, hardly. Now, the question is that a permanent feature? Or is this the trough, and then we see, production double or triple over the next few years? My suspicion would be, I don't think that the Florida citrus growers or orange juice producers are ready to, totally give up the ghost and end their lives, with their, I think they're going to fight back. I think they're going to, the trees are going to recover. I think they're going to put some investments in, and I think we're going to see a big rebound in production, over the next 2-3 years, at least something back to something more respectable. But I guess where we're at now, Casey's, we're down so low, it doesn't really matter what happens to the crop now. I mean, it's done. There's just nothing left. So It's really about how quickly do we rebound from here. And that's, like I said, so assuming, that we have, better hurricane seasons coming up, which we should, by the way, because La Nina is going away and El Nino is coming. That means better hurricane seasons for Florida. We should start to see a rebound in production. Of course, Brazil, which is the number one producer in the world by a lot, has a huge crop, has huge supplies, are having record exports to the United States. And demand is absolutely crashing here in the U.S. I mean, I believe the numbers we're talking about demand down in excess of 12% year over year. The demand is just going to just catch up really, really fast. You just can't keep having demand drop 12+% year over year and think it's going to catch up with the market. So, we've been hovering around this $2, $2.20 area, which is near all-time highs. We've been kind of building a topping pattern, but I just ultimately we're gonna break to the downside as we finally get supply and demand back into excess, as I think we'll start to see here in the spring, and those cold storage stocks, which got really drawn down to some very low levels, start to get rebuilt. So it looks to me like we're at maximum shortage pricing in right now. This is why I see it.
Right on. That's some good news for your breakfast.
It is good news if you drink orange juice. I like cranberry juice and apple juice myself, but for those that do orange juice, yes, it'll get better.
So do you get beat up in Florida if you don't drink orange juice?
I put food coloring. I put yellow food coloring in.
I got you.
Everyone thinks I'm drinking orange juice, but I'm not.
It all comes right back to get you. I know if there's roaming gangs of orange juice mafia out there trying to run you down if you didn't drink orange juice.
All I know is when I'm in public, I love orange juice.
Right on. Right on. All right. Taking a look at what's going on in some other areas of the marketplace. One thing we haven't talked about for a while is sugar. Take a look at sugar and what's going on there. We've had a couple years leading up to this year that were pretty slim on the sugar side, and we look at the sugar beet harvest that we saw across pretty much the predominant growing areas of sugar beet growing areas there, where we saw not necessarily the tons weren't there, and not necessarily the sugar wasn't there either. Usually you have one or the other, but this year it was kind of a little bit of both. So I guess looking at what's going on with sugar, Shawn, as you take a look at the markets right now, you don't see much movement there. That's been kind of hovering around between that 18 and 20 cent range here for the as long as I've been looking at it here. So I guess
2 years. I think it's almost 2 years of a flat price action. So that's the bigger the base, the bigger the move in either direction, by the way. So, we're building for something big to happen in either direction. My slant would be ultimately, not imminently, but ultimately that we'll break out to the upside, because El Nino is coming. Although, as you know, we're been pushing back on this idea that it's going to arrive by spring, summer. We're feeling it's going to be much more later in the year, but nonetheless, La Nina is going away and El Nino is coming, and that gets very, very bullish. because of the drought that takes place in Asia and, India, in Thailand, parts of China. So, we would expect eventually to see the market have to react to that when it becomes clear that weather pattern is kicking in. In the meantime, I think it could be a lot of two-sided trade. One of the things that's kept sugar prices from breaking down is, India had a great crop, but they defaulted on some of their cash sales because, they sold. India has a really crazy. It's kind of a quasi market driven, but not always market driven pricing mechanism. The government has their hands in the cookie jar, but there is a market mechanism. Bottom line is the Indians sold a lot of sugar at the lows, and a lot of defaults took place where they said, we're not delivering the sugar. And so a lot of the buyers that thought they had sugar secured had to go scramble in the market and find fresh new supplies to replace that. And that's kind of created some of these moves to the upper end of the trading range, and it's kept this market from probably breaking down more than it has. It should have broken down more based upon the actual supplies in India, but they've just not been willing sellers, and they've been playing this game of defaults. The long-term loss of confidence in a country that defaults on supplies like that is, you don't trust them. So it's kind of an interesting dynamic, and it's saying that a lot of buyers are going to be looking to secure supplies away from India, given that it looks like at least portions of India can't be trusted to deliver on their cash contract. So it's one of those quirks that markets sometimes have, but overall, I don't see really any reason to think this market's going to break up or down in any major way, at least into the springtime, and then we'll have to take another look.
Right.
So,
Right on. All right, last question here. It's more on the economy side of things, looking at most of these reports that have come out of Europe, and obviously the Fed reports that we've seen come out month over month here, and each quarter over quarter. Looks like inflation is slowly starting to slow down. I guess, Shawn, taking a look at that, what are your thoughts there on how that affects the dollar and how that's going to affect our exports as we head into this exporting frame?
well, the more the inflation rate comes down, the more the inflation rate comes down to the 2 to 4% target that the Federal Reserve has said they want in order to. The more they're going to start to slow down rate increases and eventually stop rate increases and eventually lower rates. I mean, that's a long process. So the first thing is we're expecting rate increases to slow. So the next Fed meeting here in February, it looks like instead of being, 75 basis points or 50 basis points, it might only be a quarter now, so we're slowing down the rate. And, the dollar currencies tend to be a participatory market. I mean, they tend to look out the road, down the road a little bit and see, what's coming, and they tend to react well before things actually shift. And so, you could definitely see, later in the year, into 24, that we might be talking about rate decreases. And so the dollar's had its initial knockdown from 113-ish down to 101-ish. It wouldn't surprise me if we get a little bit of a relief rally, some kind of a bounce, because the Fed's still raising rates and, oh gosh, they're not going to lower yet. The market's going to react to that. But I think we probably have made a top, and all we're looking to do now is make some kind of a secondary top. Looks to me like a lower top, maybe a rally to 107, 108, something like that. And then you roll over into something more protracted to the downside. There's an 8-year currency cycle that we follow that kicked in between 2016 and 2018, and mid-range between 8-year declines, you get this bear market rally that then reverts back down and moves the dollar to new lows. We're on the cycle says we should be ready to turn this market down into the second quarter. Secondly, we follow something called the Benner cycle, which was a farmer back in the 1800s that was tired of selling his crops at the lows and decided to look at the statistics of pricing and determine when things, if there was a repetitive cyclical nature to markets. And it's a whole range of dates, but one of the dates that we're in now, part of the cycle, is it's called the dollar devaluation cycle. 2023 is the next iteration of that. And when we do our presentations, we talk about how since 1900, every single one of these dates that the Benner cycle picked for US dollar devaluation has met with a major US dollar devaluation. So I don't know what will trigger this, but the 8-year cycle says we should see the dollar turn down, and the Benner cycle says we should see some kind of a major event, some major situation that causes a major US dollar devaluation, most likely later on in the year. And so we need to be, looking out for that, because obviously anything that brings this trend back to a strong downtrend not only improves our translational value of US priced commodities to foreign prices, but it also allows us to sell a ton of product and get more competitive again. So, I think that's one of the reasons why we're pretty friendly commodities overall in the back half of the year. And certainly agricultural prices in aggregate would participate in that.
Right on. Okay. Well, good stuff as usual, Shawn. Folks want to reach out to you and get more information about what you're doing over at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. We have lots of information on there for people to look at to see if the way we look at things with our statistics, our cycles, our correlations would be of value to your listeners.
Right on. Well, Shawn, appreciate you being on the podcast, man.
Thanks, Casey. Talk to you soon.
Safe travels going back to Florida. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. You can go to LinkedIn at Moving Iron Podcast, and you can also check me out on the YouTube channel, which is the Moving Iron Podcast YouTube channel. So check that out. Go to Moving Iron LLC for everything Moving Iron related and all the information for the Moving Iron Summit coming up here in Nashville, Tennessee, September 11th through the 13th. Have the information up there about speakers and whatnot here pretty soon, so that should be ready to go. So check that out. Again, if you're one of the first 150 people to sign up for that, you get that $50 discount. So check that out. If you want to get more information about what Shawn's doing, Shawn, what's the best way folks want to book you to come talk at a conference or something like that they have going on?
They want to go to the Tiller Group, or agspeakersnetwork.com, I believe it is.
Yep.
And that's our booking agent, and they can contact them and work out the details, logistics, the pricings, and all that sort of thing. It's pretty easy and simple, and they kind of handle everything with signing contracts and make sure everything is really official and everybody understands the expectations on both sides of what is to take place.
Awesome. There you go. Let's check that out. So you want to get Shawn over to one of your conventions, or just to talk to some people in your group, go to Tiller Group at agspeakersnetwork.com and go there. I've used them before, and to get to book Shawn, obviously, and also to have a few other speakers there. So it's a good place to check that out. So you want to get Shawn, go over to agspeakersnetwork.com and get in line up there. So with that, I'm Casey Seymour. We're Shawn Hackett. Let's move smart, folks. Out.
Moving iron in the 21st century. Hard work.